Hello and welcome back to the course. In this video, I'm going to begin to look at exits, and this is the most important part of trading beyond maybe money management. And consequently, it very rarely gets talked about, and it's because it's kind of a difficult subject for a lot of people who teach or do videos or whatever. I try to keep things simple. Now, the idea is in a trending market to let the market move in your favor as much as possible. There's the old axioms of be very impatient with your losers, be very patient with your winners, and this is a way that you can do that. Now, let me say up front, you are going to give back some of the potential profits, but nobody tops and bottom ticks the market consistently. So just get that out of your head. Now, having said that, we have an uptrend line that has been broken. So whatever your signal to short this market would have been, I mean, the trend line itself being broken could have been the signal. You get short, you notice a hammer here, and you notice support there. You notice a shooting star there before we go back and test it. And you see a little bit of consolidation. And this is a daily chart, so this is a couple of weeks. You could have put your stop loss here, or if you've got more of a longer term bias to the downside, and the time frame doesn't really matter, but I'm just using the daily so that I have plenty of candles. This could apply on the 5-minute chart as well. Now, obviously, it means more on the daily time frame than it does 5, but whatever the reason being, if you decide you want to let this market go, you truly believe that the market is going to fall apart after this trend line break, you see that we've pulled back to here. And once we break below this level here, and you can see there was some work being done there, that confirms this as a swing high. And there's no reason not to put your stop loss behind there. And at this point in time, you would have been break even probably somewhere in that area anyways. There's no reason to let this come back and take you out. And at this point, you have a little bit of profit locked in now that you're below here. You've made a low here. You've bounced. You've tested this area again as resistance. It's proven itself to matter. Then you have your stop loss here. You can see that you've made a fresh new low here, convincingly for that matter, to here. We've come back. We've tested this area again. And you put your stop loss there. We break down from there. We make a fresh new low. We go here, we go here, we go here. And eventually, we take ourselves out. And just for simplicity, I'm going to put this as 217 and this as 240. So you can see that that's 23 handles. That's 2,300 pips. That buys a lot of missed trades and a lot of trades that have taken you out. Now, granted, I realize that this is a difficult trade to hang on to. You get in August of 15 and get out in May of 16. That's not an easy trade to take. I understand that. But this is truly how money is made. It should not be exciting. As long as it's working out for you, there's no need to get out of the trade. And that's what this signifies. As long as you're making lower lows and not higher highs in this downtrend, there's no need to get out of this trade. Now, I realize for a lot of you that's going to be very difficult, and I'm not going to lie, it's not easy for me to take these trades, but you can see that you could have done it again on this massive candle here. You come back, you retest that, and you continue to go lower and lower, and then eventually you get knocked out again. So certainly it's a way to maximize your profits longer term. And I will pull this market out here. This is pound Swiss, and we have rallied as of late. You can see that, let me go ahead and change this to candles. You can see that there is an area that is obviously offering a lot of support. You have a candle. You decide to take that. That could be your signal. Again, the signal doesn't matter. And you skyrocket to the upside. You roll over. You rally from here. And as soon as you make a fresh new high, you know that you can lock in at least that much. And let's just say you get taken out here. Well, that's like 500 pips. Nothing to complain and whine about. Yes, you gave up 500, but at the end of the day, you're never going to top tick the market. And as soon as you recognize that and you give yourself that flexibility, you can benefit. Fresh new high, fresh new low. Fresh new low is confirmed once you make a higher high. So now your stop loss is here at about 130. Okay, so now you're 800 pips up. All of this in a handful of months. Yes, I understand it takes time, but that's part of what the patience of trading is. You get paid to wait. That's the truth about trading. So follow the trend, let the trend come back, let it confirm that it's continuing, and then just move up. This is, if you remember the videos that I was talking about, support and resistance, repeating itself over time, how these areas tend to matter over time. And that's simply utilizing this information, utilizing this phenomenon, and using them as road signs along the way. And in a trending market, this works really well. It tells you when something's changed. And the reality is sometimes you'll get a weird spike lower and then it'll go higher and it will have taken you out. But that's okay. You only need a couple of these trades every year to profit quite nicely. You know, are you in this to press buttons or are you in this to make money? Some of the best trades I've ever made have been done this way. Yes, it takes a lot of patience. Yes, you run the risk of being whipsawed. But again, there's always something like this going on in the markets if you just stand back and watch. Remember, the reason that these matter is because there are buyers here. So if you're below here, they have to take out all of these buyers to reach your stop loss. And that's the idea. Let the market tell you when it's time to leave. And with a trending market, this is a very great way to play it. But there are other types of indicators to get in and out of a market as well. But this is by far the simplest one and, for me, longer term, the most profitable one.